This is the shift that nobody was prepared for and can't navigate unless they dig deep. You came here for the truth, so let me unveil that for you. Today, I've got an important video. The first thing I want to discuss is food prices. They've been rising all over the place, and I'm going to show you some details surrounding that. The second thing I want to look at is real estate. Obviously, the prices have gone up, but what is the impact for you? And the third thing, we're going to look at stock buybacks. I'm going to get into the financial aspects. I somehow have to get all of this into this one particular video. Let's give it a try. Let's go. This is an interesting piece here. Absence of discounts confirms tomato soup inflation. At first, you might think to yourself, what's going on? But you take a look at it. The Campbell's condensed tomato soup has long been our favorite way to visualize the effects of inflation over time in the US economy. That's because the product is defined by its iconic packaging, a number one size steel can that contains the same amount of condensed soup as it did when the product was first introduced to the public in the late 1800s. So that is something that has been consistent all throughout. Of course, they could change the internals. Who knows what they're doing? But it's more stable than comparing different packaged products which may contain more air in the bag or less ingredients and so on, okay? And you can see for yourself, unit price per can of Campbell's condensed tomato soup at discounted sale pricing from 1898 to July 2021. It's pretty clear this has been moving up. I found this to be fantastic because it's so real and we can really actually, make sense of it instead of just saying, well, the inflation rate's 5%, but not really. If you define it by this and that, it's actually 8% or it's 10%. This gives us a way to measure it. It's interesting. I want to know what you think of it. Now, I've got some bad news for all those Taco Bell fans out there. Sorry if we can't feed your current crave. Due to national ingredient shortages and delivery delays, we may be out of some items. This comes directly from TacoBell.com. They have a banner at the top of their screen telling people they're apologizing for this. Now, this article here is talking about restaurants and everything that they've been dealing with. You're seeing significant price increases in restaurants, blaming factors including wage pressures. Like anyone who lived through the 1970s, this individual recalls the feeling of an economy that seemed to rest on quicksand. He remembers his father marveling at a 20% mortgage rate while waiting in long lines for scarce supplies of gasoline. These things did happen. They happen in the United States. It's not somewhere off in the distance, right? A repeat of that era's double-digit inflation is unlikely, according to most economists who never are able to predict anything, right? We don't know what's going to happen, but certainly there are a lot of things that are happening now that nobody thought would happen. It's an economic shift. That has already taken place. It's not like we need to wait into the future. It might get worse, could get better, but certainly what we're dealing with today is pretty serious. You've got, as they say, I think it's this article or the one of the other ones I pulled up, but essentially what we're dealing with right now are pressures from all sides. And who pays the price? You as the consumer, you've got to go in and suddenly pay this weird tax that they start adding to the bills, or maybe the price in general has just gone up. I have polled the audience and found that people have said specifically, yes, in fact, this restaurant, that restaurant, this place, that place, the prices have gone up. Sometimes it's 10%, sometimes it's 20%, sometimes they say double the price. It depends on what we're looking at. Now, this is talking about food carts and food trucks, how they have been dealing with what's been happening. And this is the quote I found the most interesting. I need the offices to be open so that I can go back to how it was before. The city is dead because everyone's home. And this is what I talked about when you have the major financial centers where a lot of those people are working from home, at least the majority of the time. What happens to all those little shops and all the little businesses surrounding that? Well, after a year, how long can you just stay at home doing nothing when you need to be working, right? These people here, they don't have income from their business. everything was fine. When the businesses were open, when the people were working, they were doing business. Now, not the case. Look at natural gas. Over the last year, this has been skyrocketing. You could see it's at almost 4, and where it was previously, a year ago, it's at 1.72. Things have really, really been changing. Now we're getting into the real estate side of this. Montana Boomtown jumps to number 1 on the Wall Street Journal/Realtor.com Housing Market Index. The important point here is that they show how the housing boom has ignited home buying in smaller to mid-sized cities. It's not necessarily the San Francisco, Manhattan, some other areas that had been booming. We had seen that previously. It's now the small and the medium-sized towns, meaning that people who would normally be buying something for, let's say, $200,000 are now paying $400,000 in such a short period of time. It's a big hit. It really is a big hit. Another month, another record. SoCal home prices hit an all-time high. This is just one more place where this is happening. Housing starts right here. In general, over the last year, it is always up and down, but certainly they're on the up right now over the past few months. If I pull this back over the 5-year, the general trend is up. Looking at building permits, those have come down from their peak. If I pull it back 5-year, we'll get a better look. Again, on the way up. These are two very important statistics to look at when we want to see what's going on with real estate. If you're going to buy real estate in your city, look at the building permits, look at the housing starts to get a general sense of what's going on. But more importantly, I would be going around, walking or driving, and get around that area and look, because a lot of these developments, they've got to be putting up signage and they got to tell you what's happening. You could see that for yourself. Okay, so this is really key for people to understand, because quite frankly, I think for a lot of people, they don't understand the shift that's taking place today. We need to be ahead of the curve. More U.S. inflation pressure to come from seniors' income boost. I want to talk to people right now about this, because I know a lot of people that have shared their feelings over the years about what's going on. When you're living on a fixed income and you get this, you might think to yourself, wow, this is great, because as they say here, Social Security payments may rise most since 1983 as prices are up. Great, right? They're going to get more money. Seniors could get the biggest Social Security increase since the 1980s. You can look at that, 6.1, fantastic, right? And I thought I had it here, but let me just say it. When you're seeing these factors, you think you're going to get more. You're thinking you're going to get that increase. But ultimately, you're going to pay higher prices. And at the end of the day, this is just going to pull more from Social Security, which is in fact bankrupt. How do they refuel it? Or will they end up at some point needing to make cuts? They're going to make cuts. They're going to increase taxes. Maybe a combination of both. Not good either way. Number one, inflation of prices has an impact, a negative impact, on long-term growth. Number two, you need to understand that the Federal Reserve and the central banks around the world are intending on creating a crisis by keeping interest rates low. Number three, you as an individual need to protect what you have. You need to protect the wealth. You need to trim your winnings. You need to be prudent with your investments today. That goes for your more secure investments. You need to look at that, maybe rebalance what you have. The risk side of it, you need to readdress what's happening right now. I know that this is a difficult time for a lot of people. I would highly recommend that you dig in a little deeper into the knowledge to figure out where your money is best placed today. I think that with higher inflation, there are certain places, like under the mattress with the cash, probably not the best idea. Now we'll get into the markets, and I want to start with this. The global central banks are going to continue to be uber dovish, at least for the time being, But what this individual did not highlight is the fact that by my count, there are already 21 rate hikes this year alone. Looking at this left-hand chart, estimated retail flow into US equities and ETFs. Massive flows in, massive from individuals. Anytime individuals see a dip, they buy in. From what I understand, Goldman Sachs did not buy into this dip. Who's right, who's wrong, I don't know. But you see when, Goldman Sachs sells, I think it was 20 to 25% of their portfolio, they are going one direction. And you look at what's happening with the Market Greed Fear Index by Real Investment Advice, it's still extreme, very extreme on the greed side. Let's talk about share repurchases or stock buybacks. Left-hand side, dollar announced share repurchases. This is not the highest we've ever seen before, but certainly it's a healthy dose. Right-hand side, announced buybacks by sector. I didn't need to tell you, but obviously tech is massive this time around. And, you can just go through that. But what I wanted to know was the fact that tech is by far and large the most. Shareholder payouts to strengthen, led by buybacks. Buybacks rebounding strongly from the lows. And of course, during this period of uncertainty, I've shown you this before, and it doesn't take a genius to just look that up. But like back during the financial crisis, there's concern. What are we doing? We don't know what the future has in store. So we're not going to do buybacks or as many as we were doing before. When certainty is restored, more buybacks happen. Announced versus executed buybacks. Again, not the peak, but certainly we are seeing a lot. And this has been the number one, stock buybacks have been the number one purchaser of stocks. It's crazy to think about. Couple quick notes right here. China loan prime rate. You could see that they did ease slightly on some. Then in this paragraph here, they're just talking about that. But in general, they've kept everything kind of cool. And what I would say is that they are dealing with a little bit of contraction coming from the China credit impulse, and they're trying to offset that a little bit, but they haven't done anything, I would say, anything worth mentioning at this time. Carnival stock rises after cruise operator announces 75% of fleet capacity will return this year. I did see the World Cruise, as I posted about on my Instagram, Twitter, and so on, a World Cruise selling out in 3 hours. It's a World Cruise that lasts 5 months, sells out in 3 hours. There's demand there, but 75% of the fleet capacity, I think this is just shocking to me to see it. Jeff Bezos says sales of Blue Origin space tourist flights are approaching $100 million already. Insane. Tell me what you think of this. People going up in these spaceships. Is this something that is going to be a fad, at least for the next few years? People with too much money, if we start to have a contraction, if there starts to be some serious deflation, is this something that people are going to spend their money on? Or maybe they're going to spend it elsewhere, different types of assets and things, instead of just having a little bit of fun? You tell me. I want you, please, to check this out. We're talking about the insiders, which is my way to get to you. 5 days a week, I'm going to email you the video of the day. That's my way to be able to actually get to you directly instead of having to rely on their systems, which, like I've said many times before, people don't get the notifications. Whether this is a factor of, they didn't click the bell or what have you, their settings on their device or something, or it's simply the fact that, they know what they're doing. Anyway, it's available for free at themoneygps.com. If you haven't already, hit that thumbs up button. I hope that you will do so to support the channel out. That's all for this video. If you haven't seen this video yet, then you definitely want to check it out. Click it, and I'll see you there.